Cryptocurrency has become a popular asset class with 10 years straight of high performance, being the best performing asset class in the last 10 years. It's obvious that the IRS, SARS, FIRS to MRA, even the MHRC want a piece of their money from you. The taxman want to get some of the tax money from the investors and traders in crypto. For a long time, a lot of traders and investors have been able to maneuver in this market without any taxes at all, or maybe minimal, because this was a new industry. There were no laws on how to treat some of these assets. However, this has changed in the last few years, and there are clear paths for taxing cryptocurrency and assets like it, even NFTs. That's exactly what we're going to discuss in this video. You guys have been requesting this video for a long time. Today is the day that we're going to cover it. So if you appreciate this, I would love it if you smash the like button. For every like that I get, I will do one push-up. So if you want me to get ripped, the more likes, the better. I want to definitely keep in mind also that this is a YouTube channel and I'm speaking to an international audience. So I will not be able to know the specifics of your tax law. So if you want to be safer, the best thing to do is obviously to consult a tax representative, a tax expert in your region, in your country, who knows all the details of your own tax code. But without further ado, let's get this started. Go! First, let's establish exactly what is a cryptocurrency for tax purposes. It's very important to note that most jurisdictions or most tax authorities, including the IRS or SARS, basically think of cryptocurrencies as property. Remember, crypto is not legal tender, so they look at it as a property, which means for tax purposes, you're subject to things like personal income tax if you buy and sell cryptocurrencies, whether you're trading. So for every crypto transaction you buy or sell, that is a taxable event. And also, crypto is subject to capital gains. Capital gains is for the IRS, for example, they consider that if you buy and hold cryptocurrency for a period of 6 months, you're subject to short-term capital gains if you sell it within that 6 months. Whereas if you hold it for more than 6 months and beyond, that is long-term capital gains. You're subject to long-term capital gains. So keep in mind, pay attention to the wording here, capital gains tax or income tax, depending on the buy and sell. So most countries pay attention to the buy and sell part, which means the moment you sell, you definitely make you generate a taxable event. Especially when I say sell, I'm speaking to whenever you convert to fiat. So buying crypto is easy, you can hold it, you're subject to capital gains, but the moment you sell into fiat, because that's what most tax authorities or accountants will look at, you bought crypto on this day, where is it? And then they'll start tracking it, and then until the moment that you sell it, then they'll see the difference. Okay, you made a profit, then therefore pay the tax, or you made a loss, then you can report that as a loss. Now, the scenario I just painted is a very simplistic view of looking at cryptocurrency, because you can buy crypto and you might just not hold it. You're probably staking the cryptocurrency, or you're trading but on-chain. You're not necessarily trading on Binance or Luno or on Coinbase, which starts to make things a little bit complicated. For an average crypto trader, someone who knows what they're doing and they're doing a lot more advanced things like staking or yield farming, you're doing a little bit more complex things. And before you cash out of your crypto, you might go through maybe hundreds of transactions before you actually cash out. How does the tax authorities look at that? The real answer to this, from my research, it seems like most jurisdictions still care about just the buy and sell in a very basic sense, as an asset, as a commodity in some ways, how they look at Bitcoin. But there are other jurisdictions like in the UK or in the US where they even care to the pain how you actually handle your on-chain transactions, which means everything that you do on-chain, whether you're trading you're trading using MetaMask account or any other on-chain platforms, you still are subject to report those transactions. Now, the question comes like, how do you even report it? Because if you're doing DeFi, you're doing thousands of transactions, and this is where there's a solution on top of that I personally use. I use Coinledger to do this, and at the end of this video, I will show you how you can set up to be able to record record your crypto transaction, whether you're trading on-chain or off-chain, and how you can prepare for reporting your taxes. Because yes, on-chain transactions matter. You can use them to record your profit and also your losses whenever you're reporting for taxes. And just to clarify, a lot of people think that it's considered a trade whenever they trade against the US dollar or some other local currency in fiat. That's not the truth, because most countries still consider a crypto to crypto transaction as a barter trade. Whether you traded Ethereum into Matic for profit and you made that profit, that is still going to be considered as a barter trade. Also, it can work in your favor in terms of you made a trade, you converted your Ethereum on Uniswap into another asset, and then you lost money and then you reverted back into Ethereum, and now you have less Ethereum than you had before. That is a taxable event and you will be able to report for a loss. What about NFTs? They're also treated as any other asset. The government doesn't care what kind of asset is it so much. They just care about the transaction. Buy, sell, profit or loss. It's basic accounting to them. But however, obviously there are other complexities and other things that need a little bit of special attention or explanation for whenever you're reporting your taxes. So depending on how much your activity of crypto that you're doing, you need to be keeping records. For traders, I recommend every 6 months, if you're trading in high volume especially, do a little bit of record keeping and compute your own taxes with your accountants. And there's ways to do this. Again, I use Coinledger. You can do this with coinledger.io. Link is in the description. And if you're in a country that has provisional tax, it helps to just pay your provisional taxes if you have an idea of what your tax bill might be while you wait for computation of your tax returns of the by the end of the year, or depending on which country you're in and when you're supposed to report for your taxes. So if you're in a country that has progressive tax and provisional tax, definitely pay provisional tax as much as you can if you have some sort of idea of what your tax bill might be while you're working out what your actual final tax numbers will look like. Quick pause. If you want to be successful in cryptocurrency, if you want to maximize your profits, mitigate losses, and know how to risk manage, you need to know the strategies for investing, for trading, for controlling your portfolio and growing it. These are not simply things you can find on YouTube, but you can find them at Crypto University. Our Web3 Masterclass course has everything you need to equip you with the right knowledge and strategies for you to grow your cryptocurrency portfolio and start becoming profitable as a trader. You want to save for vacation, or to buy a home, or to simply just grow wealth in your cryptocurrency portfolio? Crypto University is where you need to be to achieve your financial goals. You want financial freedom? Go to cryptouniversity.network and register for the masterclass right now, the Web3 Masterclass, brought to you by myself plus a team of other traders and investors that have been in the crypto market for a long time, and they know what they're doing and they're winning. On top of that, you will be added to a private group where all of us, we share our trades, our investments, our risk management strategies, and our daily trading activities. So if you just want to copy what we're doing, you can simply just be in the group, look at what we're doing, and you copy that anytime. Cryptouniversity.network is the place you need to join right now if you want to start making profit from crypto. Let's move on with the video. Now, everybody wants to pay as little tax as possible. What are the ways to reduce your tax bill? So there are many ways to do this, and a lot of people just don't know some of these things that they can save a lot of money on taxes, especially if they report on a certain asset. I know a lot of crypto traders and investors, they know how to report for their crypto trading activities, the coins, but they don't know how to report for, say, NFTs. And a lot of people in 2020, 2021, they lost a lot of money in the NFTs, for example, and not many people actually reported for them. On Coinledger, you can do this for free. There's this thing they call the tax loss harvesting, which basically allows you to sell all your NFTs that are useless or you have lost money on, and use that bill to report in your taxes as a loss and reduce your tax bill. This works anywhere in the world and it's free. You basically log in with your MetaMask account. It takes all that data, crunch it, do the math, and give you a report of what your tax might look like, and you take that, include it into your tax filing. Obviously, you're doing this with the help of a professional if you don't do your own taxes. Otherwise, I recommend you find someone who knows what they're doing in your specific tax region. Another way to save on taxes that is popular in crypto is to basically just move to a location where there is low tax on capital gains or zero tax at all on capital gains or zero taxes on personal tax. Like Dubai, that's why you've seen a lot of people in crypto moving out here in Dubai, because there is no personal tax and you don't basically need to report anything at all. You just make money and you even forget about it. So that's another thing that people do to reduce the taxes. Another one is to just never cash out. If you pay taxes when you cash out, well, another way to not pay taxes is to just not cash out. This is not something wrong or something criminal. It's just that if you hold onto your asset, you don't pay any taxes. You pay taxes when you sell. So what a lot of people do is that they use the DeFi platforms to borrow against their cryptocurrencies. So you can say go to Aave or to go to any other Web3 DeFi platform. Let's say you have one Bitcoin but you want $1,000. Well, you can use any of the platforms that you trust. We teach this at Crypto University. You can basically borrow $1,000 in USDT and you pay it back later whenever you have to. And remember, as you might know, you don't need to pay taxes on loans. So if you take a loan, it's not a taxable event. You're not paying a tax on loan. So instead of using the initial investment that you put in, which whenever you cash out could be a taxable event, what people do is they basically just take loans, and that means they don't need to pay tax in the immediate time. So you could implement that, but of course, I'm not a tax expert at all. You guys should consult with your tax authorities or an accountant who's an expert in taxes, but this is something that people do as well. And lastly, I want to show you guys my ultimate tool for crypto reporting and taxes. It's basically free. Number one platform for crypto taxes is Coinledger. So let me show you how it works. I will show you a process of creating an account, what it looks like, and how you can set it up for yourself. Of course, link is in the description. I recommend that you use my link whenever you're signing up on Coinledger right now. First things first, you're definitely going to need to create an account on Coinledger. You do that with your simple name and email address. And the next step, you're going to have to now connect your exchanges that you use with Coinledger. So you would select all the platforms that you're using to hold your crypto, whether it's on-chain or centralized exchanges. For example, here I can type MetaMask at the top, and you see, there we go, I selected. And after I selected all the platforms that I use, I selected Binance, Bybit. All the exchanges that you use are available here. And you say create an account. And this is what your dashboard looks like. Here you got auto import, which means you can connect your exchanges directly using APIs, and it can pull all your data of all the exchanges that you use and do the calculation for you. On here, you can also upload a spreadsheet if you have anything, because let's say you use Luna or Binance or Coinbase. Those platforms allow you to download your spreadsheet. And you can download the spreadsheet for free from there and upload it here, and Coinledger will calculate it for you. If you have multiple Binance accounts, you can just add more here at the bottom, say add Binance account or Coinbase account or MetaMask account. So let's say I want to add a MetaMask account right here. All I need to do is to now sync my wallet. On Ethereum network, and I'll put my wallet address on here, and I'll put my wallet address here and sync it. Now you can see it says one wallet address connected, and now it's importing all my transaction data, and it will calculate my tax for me. You can see right here, it has imported 280 transactions that have been imported. And these are all the transactions. These are NFTs as well as the crypto transactions. And this is a total, well, and now I'll go to my tax reports, and you can see that this wallet has a total value of $10,000 and a total income of zero. Total income, basically, if I was staking on this wallet and I'm earning from it, it would show an amount right here. And also right here, it shows my profits and losses and the total account, basically, of whether I'm in profit or losses. And you need to upgrade for you to see these numbers. So all you do is basically upgrade and you will be able to see the numbers. And on the taxable income, you can see how much you have earned from airdrop, from interest, mining, staking, income, gifts received, and others. After you upgrade, you'll be able to see all these calculations, because the hardest thing when it comes to this kind of activity is basically accounting for all these things. Like, how the hell do you keep up with all the activities on even on one crypto wallet? Because there's so many activities happening, and it makes it more complicated for you to report or to generate a tax report. So what you do, you download, you look at this report, or you give access to this to your account, or you download a document, you send it to your tax accountant, and then from there they're able to do what they have to do until you report. And that, guys, is how taxes work in the world of cryptocurrency. I know there is much more, but again, I'm being mindful that people watching this video are coming from different parts of the world, so you have to consult to a tax expert. But I hope this gives you an understanding of how taxes are treated and some of the mechanics involved, and most importantly, a tool you can use to report your taxes, because that is something that I struggled with myself for years until I started using Coinledger. If you have anything to add on or anything questions, please drop them in the comments below. Like the video as always, and do not forget to join my private Discord group to follow my trades in NFTs, in crypto, and also my altcoin recommendations that I'm buying. I usually share them with my private community. So if you're not part of that group, it's exactly why you're losing in your trades. Join in right now with the Crypto University Discord. You will not regret it. I'll see you guys in the next video. Peace out.